Myranda with theshieldsdifference.com, and today we're going to be talking about one of my favorite topics, and that is rehab loans. I brought with me Jason Fremo with Homebridge Financial. He's an expert on the subject. Thanks for joining us.
Thanks for having me.
The reason I thought it would be important to bring in an expert on rehab loans is they're a product that not that many people know about, and a lot of lenders that actually do them will kind of steer people away from them because there's a little bit of extra work involved, and a lot of people have some fear of the unknown. So what exactly is a rehab loan?
Well, Miranda, the best way to think about a renovation loan or a rehab loan is that it's just like a regular loan, conventional or FHA. The difference is it has a construction rider that allows the borrower to finance home improvements post-close onto the property.
Oh, that sounds awesome. What are the advantages of that over going and getting a Home Depot credit card or just paying cash for the repairs?
That's an excellent question. There are actually a couple benefits. If you had cash in the bank or whatever, you wanted to maintain some of your liquidity, not spend that money, this is a great way to be able to still access improvements while holding on to your cash. Alternatively, and to your point, a lot of times those other financing options are expensive. The interest rates on those are high. Let's say that you were interested in getting a pool and you needed a loan to do that. Those interest rates are not altogether friendly. With this program, you have the ability to potentially roll that into your loan amount. You can do it at a fantastically low interest rate, and the interest is tax deductible because it's on your home mortgage.
That's awesome. And who does the repairs? Are you able to use anybody you want? Can you do them yourself? Does the bank pick who does the repairs?
So the way that it works is that you work with a general contractor who is going to give you a detailed, itemized bid about all of the improvements that you want to do to the property. The great thing is you get to choose who that contractor is, who it is that you'd like to work with. Now the lender will approve that contractor, make sure that the contractor understands how the program works, how they get draws, and how they're able to run the job. But it's a great situation because you get to pick who it is that you work with. It's going to be a licensed professional, so you know that the work is going to be done correctly, it's going to be proper, and that the work will get done.
Okay, awesome. Is there anything that can't be done with this kind of loan?
Again, that's another good question, and it depends. It depends on which loan that you're doing. If you're doing the FHA version versus the conventional version, I had mentioned pools earlier. So on the conventional side, you could finance a pool or landscaping. On the FHA side, you would not be able to do that because that is not an allowable repair. So the best thing to do is to get a list of what it is that you'd like to do, talk to your mortgage professional, and see if those repairs fit for the program that you're qualifying for.
Okay. And can this be used on investment properties or only a house that you're going to live in?
Again, and this is one thing that a lot of people don't know, but if you are purchasing an investment property, you can still take advantage of the renovation loan. If you are buying it as a primary or second home, you can obviously do that, but investors who are looking to purchase, and again, you're talking about liquidity, capital, you don't want to have to put the down payment that goes with a non-owner occupied property and then have to do a bunch of repairs on top of it. You have the ability to roll those on even on a non-owner occupied property.
That's awesome. Are there any additional costs involved, and how does the process differ from just getting a regular loan?
So there are a few extra costs. There's a little bump to the interest rate, and there are a couple extra fees. The reason is because it's a more labor-intensive product. We have to have the appraiser go back out and inspect after all the work has been done. There may be a need for a consultant to go out and take a look at the scope of repairs that are being done on the property. So there is a small cost that's expressed both in fee and on the interest rate, but it's not that bad. For what it is that you're getting, it's still a fantastic option.
That's awesome. It really is a great program. I have a client right now that's buying a house for $215,000. They're going to be putting about $50,000 into the property. It needs quite a bit of work. So at the end of the day, they're going to be into the house about $265,000, and after they make the repairs, it's going to be worth about $350,000. So it really is a great program. I really hope this clears things up for you. If you have any questions, please comment below and we'll answer them as soon as possible. Thanks for joining us and have a great day.